Hi, this is Brent with another chart breakdown for trade therapy. We're going to chat a little bit about NVDA. Those of you that subscribe to trade therapy and or have followed us on the socials for a while may not have been following us this long, but those of you that have, hopefully you got to join us on this trade. What you're looking at right now is our NVIDIA chart from April 2022. Wanted to run through the NVIDIA trade with you right now. It is currently up from this point here, roughly about 540%. This is pre-split, so don't let the stock price fool you. We were looking for an entry in this demand zone here. You can see the sideways action here with a Wyckoff spring set at the end of a reaccumulation structure. Those of you that read trade therapy content and follow us understand that former reaccumulation zones are generally new accumulation zones for the next leg. So we were already looking for this area right here just based on it being the reaccumulation zone. We could see the falling peaks. We could see the rise in volume on a downtrend. We knew that this was distribution. We could see supply coming in to push price behavior further down as supply was greater than demand. So this was the entry level that we were looking for. If we jump over to the chart today, you can see that it did hit our entry, and we did make entry on this box breakout the following week. I mentioned that our trade was up roughly about 1,000%, and it is. We have taken profit. The majority of our profit we took in this range right here. Those of you that follow Clarity may recall in our spotlight we talked about how NVIDIA and XLK were all hitting their all-time supply lines. This is the all-time supply line for NVIDIA. We could see that it was up against its all-time supply line. It was also in the general neighborhood of a few Fibonacci levels, namely this 4236 from the 2000 and from the COVID pullback. I'm sorry, from the COVID pullback. So we knew it was time. It was time for profit to be taken. We do talk a lot about in trade therapy content, or have recently been talking a lot about Elliott's guideline to alternation. That means that wave 2 and wave 4 generally present themselves alternatively, meaning here we see wave 2. So this is 1, 2, 3, 4, 5, a subwave of a larger wave 3. You can see that wave 2 is flat. Wave 4 is deeper. There's much more angle to that. So wave 2, you can see wave 2 was, that was the post-COVID breakdown or corrective structure. So we're expecting wave 4 to be more flat. You can see the extension away from the 200 week. You can see the bearish divergence, which needs to be, or generally needs to be present when wave 5 is completing. So all the boxes checked off. It was a great trade for us. We're now out of NVIDIA. We're going to be watching this development here. For those of you that do follow trade therapy, you may recall our recent Clarity spotlight on NVIDIA. We did not get the extension. We thought we would get an extension, an all-time high in August, to draw in liquidity, to draw retail chasers in. We did not get that. We got to move back to the bottom of the range. It doesn't mean that tomorrow's inflation numbers won't send it back up above the range. We still think that we're going to have a pretty deep C wave here. This structure also can continue sideways. We mentioned that it was extended away from the 200-week exponential average. It is. It could go sideways for a little bit longer and allow these moving averages to catch up a little bit. So hope that's helpful. Hope that's for those of you following. I hope that provides a little more detail on our analysis, so you see where we're coming from. If you're not following and not subscribing to our Clarity Spotlights or our YouTube channel, or following us on the socials, now you see why you need to. Thanks a lot. Hope this is helpful.